Prepare to see the rise of the electric powerhouse Tesla, which intends to deliver 20 million vehicles by 2020 and enter the mass market. The company is fully committed to its goal of revolutionizing the automotive industry, but it isn't just focused on electric vehicles. It is also making significant investments in renewable energy and has a new factory in Shanghai that will produce megapacks. In this video, we'll examine Tesla's audacious intentions for expanding into the energy storage industries, where the company appears to have a bright future. First things first, if you haven't subscribed to our channel yet, now is the perfect time. Click the subscribe button, and by the end of this, you will know why Tesla is benefiting from its new factory in China and how it is beating out its competitors. So buckle up and let's take a closer look at Tesla's electrifying future. Please give the video a high five. Tesla has set high goals for itself, aiming to deliver 20 million vehicles by 2020, which would give it a massive 24% market share and make it the leading automaker. The company has outlined a plan of action for reaching this challenging goal, which includes reducing costs by 50% to enter the mass market and capture 50% of the market share. They intend to do this by reducing the cost of general assembly and powertrain batteries and by expanding into new markets. They intend to establish a new facility in Mexico's Nuevo Leon. In addition to the advantages of being in Mexico, this location offers various advantages, such as access to a skilled workforce, lower labor prices, and closeness to vital trade routes. By producing their cars in Mexico, Tesla is also able to benefit from the $75,000 IRA credit, a tax credit offered to American consumers purchasing electric vehicles that can help lower the cost of a Tesla. Tesla is able to continue receiving this credit and pass along the benefits to their clients. The fact that Mexico has multiple tariff accords with Latin American nations due to its export of automobiles from its new Mexican facility is another advantage of doing business there. By taking advantage of these agreements, Tesla will be able to offer its products to consumers in Brazil and other Latin American nations for less money. Overall, it seems that Tesla made a wise option to establish a new plant in Mexico by utilizing with 1.3 million orders. The Cybertruck is coming this year, and if they can launch it this year and deliver 200,000 units next year, that's worth about 40 cents a share. By cutting costs and branching out into new markets, they are positioning themselves for continued growth and success in the future. As a result, many investors are feeling bullish about the company's prospects and optimistic about its future performance at Tesla's recent Investor Day. They demonstrated a breadth of management talent, which was pretty reassuring as it's not just an Elon Musk company. Tesla has made a name for itself as a manufacturer of high-quality electric vehicles, EVs, but they also build solar panels and batteries that can store renewable energy, which is crucial for the switch to clean energy. In order to sustain its low-cost EV production, Tesla has implemented new policies and committed $5 billion in a new gigafactory in Mexico. Their energy division, which generates and stores energy worth $801 million, is another growth engine. Some analysts believe that Tesla's energy sector has a lot of promise and are highly positive about it. Inadequately recognized catalyst, an important Tesla investor named Gary Black anticipates that by 2023, Tesla Energy would generate roughly $20 billion in revenue and $8 billion in gross profit. Investors shouldn't pass up this chance to invest in Tesla, since its future is bright. Canaccord Annuity recently lauded Tesla as a sustainable behemoth, pointing to their electric vehicles, energy storage, and solar platforms, and their leading positions in both markets based on annuities for Tesla. The upcoming months were promising, and the business has a solid cash sheet to withstand any possible recession. With a growing focus on renewable energy overall, Tesla is providing a variety of solar and energy storage solutions for clean energy applications. Recently, the company revealed plans to construct a facility in Shanghai to manufacture its megapack battery, which will extend into the Chinese market at the same time as 10 U.S., with ambitions to create 10,000 units annually for global distribution. The new factory on China relations is scheduled to begin construction in the third quarter of this year and begin production in the second quarter of 2024. China is the company's second-largest market, accounting for about a quarter of its revenue in 2022. Roughly half of Tesla's global car deliveries come from its Shanghai facility, which supplies both the country's domestic auto market and exports vehicles to Europe. With a population of over 1.4 billion, China has been a major contributor to Tesla's global growth plan. Since China is the largest automotive market in the world, there is a lot of possibility there for Tesla. As the first foreign automaker with a wholly owned factory in China, Tesla started producing its own gigafactory in Shanghai in late 2019. Since then, the company has been able to capitalize on China's strong demand for electric vehicles, EVs, and the nation's efforts to reduce carbon emissions. The Tesla factory in Shanghai has been at the facility makes the Model 3 and Model Y, the company's most popular vehicles. By producing these vehicles locally, Tesla has been able to avoid China's high import tariffs on foreign-made goods, which has played a major part in the company's expansion in China. In addition to meeting local demand, Tesla's Shanghai factory is responsible for exporting vehicles to other markets. In 2020, the factory exported over 30,000 Model 3s to Europe, helping to boost the company's global sales. This has allowed Tesla to take advantage of China's competitive labor costs, as well as access the country's vast network of trade agreements with other countries overall. Tesla's ability to make its cars more affordable for Chinese consumers has helped the company increase its market share in China's EV market, which is already the largest in the world. China has been a major factor in Tesla's growth, and the country is probably going to continue to be an important market for the firm in the years to come. If you weren't already aware of how important this could be for Tesla, several provinces are requiring new solar and wind farms to have enough batteries to hold a percentage of the electricity they generate. China's growing demand for grid storage batteries due to waves of blackouts in 2021 has opened up new opportunities for Tesla's energy storage products. Watch this space in the upcoming months. Click the like button because the company's development into the renewable energy and battery storage businesses appears to have a bright future. Sign up and activate alerts to remain informed about all Tesla-related developments pertaining to the subject at hand. The installation of electricity storage systems has resulted in a massive increase in the global demand for energy storage. China is the leader in both the manufacturing of rechargeable batteries and the chemical reactions required to produce their constituent parts. Tesla will be able to meet the growing global demand for energy storage thanks to its new factory, which will capitalize on China's battery supply chain. US listed by DXPeng and NIO, with the opening of a new mega-pack facility in Shanghai and a rise in output at their previous site, Tesla has slashed the price of its cars and provided incentives to customers. In a recent tweet, Tesla stated that it wants to stay ahead of the competition and keep meeting the need for energy storage worldwide. Elon Musk declared that the manufacturing of their mega-pack facility in California will be boosted by the upcoming Tesla factory in Shanghai. China's government and the Biden administration have been pressuring businesses to invest in innovative technologies. In order to address the rising demand for electric vehicles, President Biden's Inflation Reduction legislation offers incentives for the production of rechargeable batteries in the U.S. But in order to really produce affordable electric vehicles, Tesla's ambitious goal of selling 20 million cars annually by the end of the decade will necessitate a large increase in the availability of batteries. Cost controls must be put in place across the supply chain, particularly for batteries. Simon Moss, CEO of Benchmark Mineral Intelligence, thinks that if Musk can lower battery costs, Tesla would have an easy time growing. However, if Musk is unable to do so, rivals will be quick to grab market share. What do you think about this development? Please let us know in the space provided below. Additionally, don't forget to share your assessment of Tesla with us. If you'd like to stay up to date on Tesla's recent activities, be sure to watch the next video that appears on your screen.